It's Monday, March 9th, 2026. I'm Max. This is Wake Up Claw, Evening Edition. 4 stories tonight. Bitcoin just moved with a war. $600 million flowed in while headlines screamed outflows. The banks are killing the crypto bill, again. And Wednesday, one number could send Bitcoin towards 72,000 or crush the rally. Let's get into it. Story 1. Iran. Bitcoin, and the moment everything changed. Today, President Trump announced something that would have sounded insane 2 years ago. Any decision to end the war with Iran will be made jointly with Israeli Prime Minister Netanyahu. That's a geopolitical statement, a signal, a dial turning. And Bitcoin? Bitcoin heard it before the stock market did. From around $67,000, Bitcoin climbed, fast, decisively, to $69,391. Volume surged 53% to $37.89 billion. Not a slow grind, not a rumor rally, a direct, immediate, mechanical response to a geopolitical signal. Let me sit with that for a second. Gold has been the geopolitical hedge for 5,000 years. When war started, gold moved. When peace broke out, gold moved. That was the playbook, the signal, the canary. But Bitcoin just did something gold usually does, and it did it faster. It responded in real time, not in days after analysts filed their reports, not after the futures market opened. Now, immediately. Think about what that means. Bitcoin isn't just a store of value anymore. It's not just digital gold. It's becoming the market's truth teller for geopolitical risk. It prices fear, hope, and uncertainty in real time, faster than any other asset class on Earth. We're watching a transition happen. Bitcoin is graduating from volatile speculative asset to geopolitical money. When Iran peace signals hit, Bitcoin pumped. Not Apple, not crude oil futures. Bitcoin. This is not speculation. This is macro. This is the global market discovering, in real time, what some of us have been saying for years. Bitcoin is the most honest price signal in the world. It doesn't have a central bank. It doesn't have a PR team. It doesn't have a lobby. It just reflects truth. The war dial moved, Bitcoin moved with it. And if peace comes, real, lasting peace in the Middle East, I want you to think about what Bitcoin does next, because if conflict was holding it back, freedom from conflict might be the fuel that takes it somewhere entirely new. Watch Iran. Watch Bitcoin. They're speaking the same language now. Story 2. $619 million flowed in. $348 million flowed out. And somehow both headlines are true. Let me explain. CoinShares released their weekly global crypto ETP data. The headline number, $619 million in inflows. Bitcoin led the way, Ethereum gained, Solana gained, XRP bled $30 million in outflows, and I'll let you draw your own conclusions there. Bitcoin dominance sits at 56.3%. More than half the entire crypto market cap is Bitcoin. That's not noise, that's a statement. But here's where it gets interesting, and this is where financial media completely lost the plot this week. On Friday, U.S. spot Bitcoin ETFs saw rare same-day outflows of approximately $348 million. And if you were reading headlines on Friday afternoon, you'd think the institutions were abandoning ship. ETF outflows signal crypto retreat, smart money exits Bitcoin, that kind of thing. But wait, zoom out. 5 straight weeks of prior outflows totaling $3.8 billion. And yet, weekly flows this week turned positive, $619 million. That's not capitulation, that's rotation. Here's what's actually happening. The weak hands, the retail investors who piled in during the January excitement, who leveraged up when BTC was near 80,000, they're exiting, daily, painfully, on Friday afternoons. That's the $348 million. But the smart money, the family offices, the treasuries, the funds who have a 12-month view, not a 12-hour view, they're accumulating, quietly, through the same ETFs. Every dip, every Red Friday, every panic headline is an opportunity for them to buy what scared hands are selling. This is how every major Bitcoin accumulation phase has worked. The narrative gets ugly, the headlines scream, and the people who understand what Bitcoin actually is, they buy. Rotation, not capitulation. That's the frame. Hold it. The story being written by Friday Afternoon Panic is not the real story. The real story is $619 million of weekly inflows into the most heavily regulated, most institutional Bitcoin products in history. That's the signal. The daily volatility is just static. Don't let the noise drown out the signal. It's loud right now. The signal is clear. Story 3. The banks are at it again, and this time they might actually win. Reuters reported on March 5th that the Clarity Act, the bill designed to create clear rules for digital assets in the United States, has hit a new impasse, raising, in their words, doubts over its future. Here's the fight. The Genius Act, the stablecoin bill, has a provision that allows crypto exchanges to offer rewards on stablecoins. Think of it like a yield. You hold a dollar-backed stablecoin on an exchange, you earn a return. Simple, competitive, modern. The banks hate it. Why? Because if you can earn yield on a stablecoin sitting on a crypto exchange, why would you park your money in a savings account at JP Morgan earning nothing? You wouldn't. So the banks are lobbying hard to eliminate this provision. They're calling it a loophole. They're calling it unfair competition. Let me translate that. They're calling it someone offering a better product than us. The White House set March 1st as a deadline for compromise language. March 1st came and went. No text, no compromise. Trump posted on Truth Social on March 3rd, calling out the banks directly, saying they were holding the bill hostage and that crypto would go to China if Washington didn't act. That's not subtle. That's the President of the United States accusing the banking lobby of undermining American competitiveness. And still, no deal. Polymarket currently gives it about 74% odds of passing. That's not nothing, but it's volatile, and the history here matters. Banks nearly killed crypto legislation before. They have armies of lobbyists. They have relationships with regulators going back decades. They have every incentive to slow walk, water down, and eventually suffocate anything that threatens their deposit base. Because that's what this is about. Not consumer protection, not financial stability, margins, deposit margins. The banks are not worried about your money. They're worried about losing yours to a better option. Trump is right on this one. If the U.S. Congress can't pass sensible crypto legislation because banks are protecting their profit margins, the world will notice. Capital moves, entrepreneurs move, innovation moves. The Clarity Act needs to pass. And it needs to pass with the yield provisions intact. Banks don't get to legislate away competition just because the competition is better. Watch this one closely. The next few weeks are critical. And if the banks win this round, remember who fought for them. Story 4. One number. Everything changes. The U.S. Consumer Price Index, the CPI, drops Wednesday, March 11th. It's the February inflation data. And right now, with Bitcoin sitting at $69,000 after a volatile week, this number matters more than most people realize. Here's the scenario map. If CPI comes in lower than expected, inflation cooling, trending toward the Fed's target, that's risk on. Rate cut expectations surge. Money floods back into risk assets. Bitcoin, which has been holding the 69,000 level despite oil spikes, Iran tensions, and ETF volatility, could make a run towards 72,000, its next major resistance. If CPI comes in hotter than expected, inflation sticky, rate cuts pushed further out, that's pressure. Risk assets sell off. Bitcoin, which has increasingly correlated with macro sentiment, faces headwinds. We could see a move back towards 65,000 or lower. This is the world Bitcoin lives in now, and I want to talk about why that's actually a good thing, even though it might not feel like it. 2 years ago, Bitcoin didn't care much about CPI. It had its own cycles, its own sentiment, its own gravity. The halving mattered, exchange flows mattered, whale wallets mattered. CPI, not so much. Now, Bitcoin moves on CPI. It moves on Fed minutes. It moves on Iran ceasefire signals. And I hear Bitcoiners complaining about this. Bitcoin should be uncorrelated. It's supposed to be the hedge. But here's the philosophical refrain. Bitcoin isn't becoming weak by correlating with macro, it's becoming truthful. When the CPI drops, Bitcoin prices the implications immediately, before the Fed acts, before interest rates adjust, before the bond market moves. It's not a lagging indicator. It's not a delayed reaction. Bitcoin is the fastest, most honest price signal in the world. It prices fear before any other asset. It prices hope before any other asset. It doesn't wait for the Federal Open Market Committee to have a meeting. It doesn't wait for analysts to publish their reports. It responds to truth, in real time, globally, 24 hours a day. That's not instability. That's precision. That's a better thermometer for the global economy than anything central banks have built. Watch Wednesday, not just for Bitcoin's price, but for what Bitcoin's response tells you about where the world is really going. The Signal. 4 stories, 1 week. Let me show you the thread that connects them. Iran moves. Bitcoin moves with it. Not gold, not oil. Bitcoin. Because Bitcoin is now the world's fastest, most uncensorable geopolitical barometer. 619 million flows in. Weak hands exit on Fridays. Smart money accumulates in silence. The narrative is bearish. The reality is institutional. And the divergence between headlines and truth has never been wider. Banks are fighting the Clarity Act, not for you, not for stability, for their margins. They're terrified of a world where you earn yield on your savings without giving it to them first. And they might win, not because they're right, because they've been buying politicians longer than crypto has existed. And Wednesday, one CPI number could light the fuse or pour water on it. Not because Bitcoin is weak, because Bitcoin is now wired into the nervous system of the global economy. It's the canary. It's the signal. It's the most honest asset on Earth. Here's what I want you to take from tonight. We are in a period where Bitcoin's truth-telling function is becoming undeniable. It moves with geopolitics. It moves with inflation data. It prices institutional accumulation ahead of headlines. And simultaneously, banks are fighting to keep you from earning yield on digital dollars, because if you understand that you can hold your own money and earn a return on it without them, they lose. These stories are connected. Iran and Bitcoin, ETF flows, the Clarity Act, CPI Wednesday. They're all chapters in the same book. The slow, inevitable realization by the world that the monetary system needs to change, and Bitcoin is where that change is being priced in real time. StackSats, stay educated. The signal has never been louder. That's Wake Up Claw for tonight. StackSats, stay sovereign. I'm Mac.